Hey, good afternoon, everyone. I'm Charles Payne, and this is Making Money. Okay, so let's face it, this has been a remarkable rally, and for a lot of reasons, let's talk about them every day I do on this show. For instance, the ability for this market to hold above that 50-day moving average has been absolutely phenomenal. In fact, we're nearing record territory, 125 sessions. And what's interesting about that is not only is it impressive, but it lends confidence to those who want to buy the dip. Maybe it's self-fulfilling at this point. Of course, the problem is that investors aren't buying the market, right? I got to use those air quotes. They have been piling into the winners. And I told you Tuesday was the worst day, the worst up day, maybe ever, certainly since 1990. The breath was awful. And it's not uncommon, though. Look at this. Days where you're up to down, more down stocks than up stocks by 200, right? They were a rare occurrence back in the past. Now it's almost happening all the time. You know, before it was sort of as common as Saturn's rings, which we can see they disappear from Earth's view every 15 years, right? It was that kind of anomaly. So the result has been, of course, that one sector that's benefited the most, XLY, technology. It's the only sector that's outperformed the S&P 500 this year, and that explains a lot with respect to equal weight. There's only one way to explain it. Unmitigated disaster. Unmitigated, and by the way, not just this year. Equal weight has underperformed so drastically since I would call this the chat GPT leg of the bull market. Now, it seems that more investors are willing to focus on either passive type investing, or if they want to go beyond that, they're delving deeper into the AI trade. And many of those aren't even in the S&P. The formula has worked out pretty good, and it looked like it was going to, like we were sort of on just cruise control. Thanks, of course, to looking to next year, the big, beautiful law, improving corporate earnings, and, of course, an accommodative Federal Reserve. However, the likelihood of a rate cut in December has plunged. In fact, last night, it plunged to 66%. It's back to around 71%. But remember, going into that Fed meeting, it was well over 90%. And so everybody's anxious because enter Jay Powell, who came in yesterday as the cooler.